everyone, and welcome to The Hash. This is our Friday show. Super excited to have David Morris, Jen Sanasie, Will Foxley, Zack Seward, and I'm Naomi Brockwell, and we're diving in, as always, into the latest in crypto and culture. And Zack, I believe you have the first story. We've got some trouble with Binance regulatory worries. What's happening there?
The latest action is from the Thai SEC. They have hit Binance with a criminal complaint for operating without a license. It's the latest in a string of enforcement actions against Binance. And I just have a feeling that something is going to happen big on this. It's Friday before a long weekend. I would be wondering if others potentially here in the US could be taking actions as well. Just have a bad feeling. So I'm going to kick this one off to you, Naomi. This is again a string. This is the latest in a string of actions that suggest that regulators worldwide are taking this Binance thing more seriously. What do you make of this?
I mean, it seems to be happening everywhere. We've talked in the last few weeks about this string, as you said, of regulatory pushback against Binance. It is a kind of unique company in that it doesn't seem to be domiciled in any particular place. And I think governments are trying to figure out, well, what jurisdiction is this in? The only thing they can really control is what the citizens in their countries have access to. So they're starting to clamp down on all of that. I mean, it's kind of interesting because we talk about Bitcoin as being this decentralized entity that even if it's shut down in one place, you know, it's not going to die because it exists in other places. And I think that jurisdictional arbitrage can apply to all kinds of entities. It doesn't have to just be a decentralized entity like Bitcoin. Binance is clearly an incredibly centralized company, but they just happen to be geographically dispersed. And it seems like that may be enough to kind of keep them going as long as they have their operational in a country that isn't going to try to push back against them in a regulatory way. Then people are still going to access them. I mean, even in places where they're banned, like in the US, there are lots of people who use VPNs and go to Binance because it has the most liquidity. It has the most coin offerings. It has good fees. There's a reason why people like it, but governments think, well, they shouldn't like it. We should protect them. So they're all pushing back, saying, well, you didn't file the right paperwork, et cetera, et cetera. I think, honestly, it doesn't matter what these governments do. As long as Binance exists somewhere, people are still going to use it. But David, I would love your thoughts. Sorry, Zack, you had your hand up as well.
Yeah, I think Zack got in first, or Will maybe.
I'll just do a quick point of fact. I mean, so my fear that the other shoe will drop stems from a report in May from Bloomberg that U.S. officials were also conducting an investigation that's yet to be confirmed, but we may or may not see that soon. I saw Will's hand up first, then Jen, and then David. Will, what do you have to say about Binance right now?
Yeah, I'll go real quick. So we've always talked on the show about how Binance does this regulatory arbitrage idea, but I saw a great tweet yesterday reminding me that Singapore invested a ton of money into Binance. Like their sovereign state fund was one of the biggest backers of Binance early on. And so if you look at this regulatory landscape, you often see these players work in concert together. And you see that with like the G7 recently looking at issuing a global tax rate for corporations. While that also comes down to like who they are regulating on the financial front with FinCEN. And that just kind of disperses all across the world. So it's interesting that it puts Singapore versus all these other countries, which they want to have more like stable control over money moving around the world. But Singapore has a huge investment in Binance, and I just don't see them taking this lying down. But Jen, your thoughts?
Yeah, we talk a lot on this show about regulators not really understanding crypto, and I think Binance is just the biggest target. You know, it's easy for regulators to go after Binance. They're the largest exchange. What was interesting to me in this story is that one of the reasons cited was that there's a Facebook page, a Binance Thai community Facebook page. I tried to find that page. The one I found, and I can be corrected, but the one I found had a Gmail account attached to it. I think it had about 2,000 followers. It wasn't clear that Binance was running the page. And it was interesting to me to see that that's what the regulators were citing, was there's a community Facebook page in Thailand. So this means that they must be after Thai users. And it feels to me like the regulators are grappling at straws. And that's why I'm really interested to see how this plays out over the next few weeks or months.
So continuing to work through our Occupy Wall Street style stack here, I just have two things to say. One is that the states will continue to clamp down, and that creates problems for the founders, regardless of where the company is domiciled. So that's one thing that they do apply pressure to that. Historically, it's really interesting to look at this because when you go back to like 2017, around the era when Binance really started becoming dominant, I think that actually might be more like 2018. They didn't even launch until 2018. They were seen as like the clean operators. They were the transparent, open people who were going to come in and comply enough to play the game. And so it's interesting to see them getting cracked down on. And the other thing I would say is this is a timing thing, right? Like regulators get interested when something is big, and crypto has obviously seen a huge growth over the last year. Otherwise, they wouldn't be interested. But this is also kind of the end of the cycle. If you look back again at 2018 and 2019, regulatory crackdowns come after the surge. And then, if, for example, Binance becomes harder to use, that'll put downward pressure on the market as a whole, and just kind of complete the journey into what we last time called crypto winter. So we'll see how that plays out, but certainly macro market risk.
Yeah, BitMEX seems to be the comparable thing here, and we'll be watching closely throughout the rest of the day and into the coming weeks. Will, take us away. You have our next story.
That's right. Jack Mallers just can't get out of the headlines these days. So Strike, which is his payment company, is looking at issuing essentially 0% cost for purchasing Bitcoin through them. So they're going to roll this out slowly. It's only a beta phase and you have to sign up first, but it should be like 0.03 or 0.3% fees for buying Bitcoin through their platform. Strike itself is similar to Venmo. It's an app, you can download it today, and has a very similar feel to anything like Cash App or Venmo. And you can just buy Bitcoin through it now, or at least they're slowly rolling that out. They're taking a big shot at Coinbase, Square, and Venmo and PayPal itself by making just fees extremely low. So interesting to see them roll that out. It seems like a very natural next step for them. They made a point of saying that they're not going to make much money on this at all, if any. So that's interesting to see that they're kind of rolling out some products that I don't really know how Strike or Zap, the parent company, makes money. Zack, your high-level thoughts on this one?
I think the Wall Street analysts really called this one when Coinbase went public, right? They said, hey, we've seen this in the traditional brokerage space. We're going to see it in crypto. There's going to be a race to zero for transaction fees. And if you're Coinbase and your retail business is largely supported by transaction fees that tend to be quite high, that's going to be a problem for your long-term earnings. So credit to them, credit to the analysts who called this one. And I think this is the first sort of opening volley in what's likely to be a long process toward that race to zero, right? Here he's saying, hey, hey, Coinbase, whatever, I'm ready to take you guys on. Let's go. I got no fees. Let's do this thing. And I think that other people, be they centralized exchanges or be they even decentralized players who get spun up on bigger and better infrastructure going forward, I think we are going to see this race. And this to me is that, that firing gun for the race to zero to begin. So that's my high level takeaway on this one. Interesting that Jack Mallers here is calling Brian Armstrong out by name in his traditional cavalier fashion. So it's fun to see a little bit of the showmanship on display as well.
Yeah, one quick point. I don't know if this means that Insight is already priced in, but Coinbase stock's actually up a little bit today, so people are not panicking at this news yet, or maybe they already got the panicking out of the way.
Maybe it's the Binance rumor.
Yeah. I'll also add that when we're talking about like trading fees, it's sometimes not quite as clear as it seems when companies say, well, we have 0% trading fees, and you've got to look at the spread, right, between people who are buying and selling the crypto, because a lot of these companies, they'll say, well, there's zero fees, but then they'll charge you like 4% because there's a spread, and they're just kind of getting your money by just giving you less crypto for your fiat. That's something that I discovered with my traditional banking account in Australia years and years ago. When you try to send money over to America, you got to deal with exchange rates, and then they say, well, there's 0 fees, and you look at it and you literally lose 4% on your money because the amount that they're willing to buy back your money is not the same as the amount that they're willing to sell it. So it is interesting that Strike actually clarifies this. They say that the 0.3% fee will only cover the spread charged by the market making firms supplying the Bitcoin. I wonder if it's I'm having trouble parsing that. Is that 3% fee that the market making firms are charging, or is that 0.3% spread between prices? Because I'm not sure how they could guarantee that, but I'll throw that to you, Will. Maybe you have some insight.
Yeah, so looks like from the article itself, we're talking about the fee going to the market maker. So whoever Strike has tapped to be the market maker behind the scenes on this is working with that spread. That I think they're getting most of that, and I'm assuming that they're just kind of seeing that if they have a high volume through this customer-facing app, then they can kind of take in more money over time, because that's a pretty low fee historically. Looking at some of the other exchanges, like we said, Coinbase is like 2.5%, and Cash App is like 2.3%. So it's like a huge difference. And of course, there's a few other fees you have to think about when you're doing this, like the mining fee. If you're going to pull the Bitcoin back into your own personal wallet, then you have to pay that, and that can be like very variable. So yeah, there's a lot more here than just meets the surface, but interesting that there is a race to zero here, as Zack said.
One quick note, I looked for numbers and I couldn't find exactly the clear ones, but it seems pretty likely that Strike has much lower app install base and user base than the likes of Coinbase and Venmo in particular. So it's worth pointing out that, you said they don't expect to make money on this. It's essentially a customer acquisition play, among probably other things.
Yeah.
So they benefit from even not making money, because obviously people are going to transition. So that's the play for Strike and for competitors. Zack, I think we're supposed to throw to something else.
We're going to throw it, and I'm going to throw it smoothly. Let's talk about some competitors. We're going to go to Robinhood, trading app, big time one. They filed to go public with their S1 yesterday, revealed all the juicy details about their business and what they see going forward. We'll talk about that after the break. Stick with us. It's the Hash. Yeah.
Welcome back to the Hash, everyone. We are starting out this block by talking a little bit about Robinhood. Now, we mentioned yesterday they were subject to this big lawsuit, and there are people. I think it was $70 million fine. Perhaps you can correct me. But basically saying, you aren't educating people enough. You need to help them understand what leverage trading is. And then they say, listen, we're going to pay this. We're getting it out of the way. We're moving forward with this, looking to the future. Well, today we learned what that future was. They are actually filing, or they have filed for an IPO. So they, as we know, they're a popular trading app for stock options, stocks, options, gold, cryptocurrencies. Their filing with the SEC suggests that the public offering could be worth up to $100 million. And it also seems like we got some little nuggets from this filing, but maybe I'll throw it to the group and you guys can go through some of those nuggets. But there were some little interesting tidbits of information. Zack, I'm going to throw it to you to start off with. What are some things that we learned from this filing?
Oh man, a lot of good little nuggets. S1s are really fun. There's so many good nuggets in the S1. Everyone across the media landscape can dive in and find the nuggets that make sense for their audience. And for us, the nuggets that make most sense are the crypto nuggets, of course. So we looked at the crypto nuggets yesterday. I think they said that something like 17% of their revenues come from their trading of cryptocurrencies, which is really interesting. Of that, which was up significantly from the previous quarter, Doge captured, I think, something like 34% of associated revenues. So clearly this is a big time
of crypto
Doge.
revenues.
Sorry, yes, associated crypto revenues. Sorry, not the whole thing. Of the 17%, 34% blame it on the Doge. So the fact that that represented such a significant portion of their growth was something that they had to indicate in the filing itself. Like, should interest in Dogecoin fall off and no other cryptocurrencies pick up the slack, that could adversely affect our financials going forward, which I thought was funny, but also, is very revealing of just how far, Robinhood extends itself into the crypto market and is a popular vehicle for trading some of these meme stocks and also obviously meme coins. So that's the nugget that stood out to me. I mean, David, you could probably find a nugget or two in there.
Yeah, I think the other one that a lot of people pointed to, well, there's two numbers that are very closely related. One is that 50% of all Robinhood traders are apparently first-time investors. And the other number that when you put it next to it is utterly terrifying is that 38% of all Robinhood revenue came from options trading. So you look at those two things, and options are very complicated, often hard to understand, and we've seen a lot of stories about people having really bad outcomes with that. And so you have first-time traders playing with very advanced stuff, and that's what Robinhood's business model is based on. And so for me, and Naomi, I think we're on the same page in terms of believing that individuals should have the ability to take these risks and make those choices. But that, is totally compatible with the idea that this is a company that is encouraging people to take those risks as part of its business model. And that might make it a long-term, not such a great business model. So my concern as an investor would be that the people who shouldn't be on Robinhood trading options in the first place will eventually figure that out and stop using Robinhood. So we've gone through this year of massive expansion and new interest, but I'm not sure that things are going to remain at that level because, people statistically are losing money on Robinhood.
Yeah, David, it makes so much sense when you point out those nuggets as to why they would have released that blog post yesterday, not admit fault and pay this fine and kind of move into this filing today. I'm really
get into
interested.
The fine. I don't know if you want to catch us up
on the fine we spoke about yesterday.
Oh, we did talk about it yesterday. That's right. Sorry.
Yeah, I can catch our audience up. I mean, it's bad of me to assume that people watch us every single day, but Robinhood has settled a fine from FINRA. They've agreed to pay $70 million. About 57 million of that is a fine, and then about $12 million of that is to go towards people who have filed lawsuits who've lost money on the platform. When they settled, they didn't admit any fault, and they've just agreed to, provide more education on platform and more support for these new users that you just brought up. So that's the TLDR on that.
Yeah, it's interesting. If you look at the underwriters for this IPO, they include Goldman Sachs, JP Morgan, Citigroup. So clearly, big banks are realizing that there's a tremendous market for allowing everyday people to trade. And if 50% of these users are first-time traders, it's just opening up to a huge market. And not everyone is happy about that. So Charlie Munger has had some pretty bad things to say about Robinhood. I don't know if, David, if you wanted to dive into what Robinhood, he has some pretty spicy comments there.
Yes. So this came in the context of a conversation with some other comments that we'll get into. But, I think he pointed out essentially what I did, which is that, there's a lot of people taking big risks on the platform. The main point that he was making, and, Warren Buffett also chimed in, is that because they are making their money, Robinhood, off of a lot of volume of trades, right? They don't charge fees, but they make money off of spreads, and they make money by selling trading information. So they benefit from high volume, high frequency trading. And that means that they're incentivized to, within the app, motivate you to do that kind of activity. So for example, they have all kinds of gamification. You get little bursts of confetti when you take certain actions within the app, which, gets younger people to act certain ways based on feedback. And so Munger's complaint, to my mind, was mostly about that structural incentive factor, where you have a company that is, encouraging people to invest in a very specific way that, historically has not been good for investors. But Naomi,
I will say that The one thing that he said that I agree with, and it's what we were talking about at the start, is that, the app is telling people they aren't paying commissions when the commissions are simply disguised in the trading. That's also the difference between having outright fees and then just disguising it in the spread there. But it just seems like this angry old man who really likes his privileged position where he has access to all these financial tools and doesn't want the masses to get them. Like, he's saying it's a gambling parlor masquerading as a respectable business. It's a disreputable operation. Like, and what he's doing isn't, I just feel like he's really pushing that as the other, and what he's doing is up on this pedestal and he's really researching these things. Like, I'm sorry, but that really disrespects the people using this platform who perhaps may be researching things as well. He doesn't know. And he's making all these assumptions, but based upon it being this very popular app, the masses are using it, he thinks that it's kind of this disgusting scheme. I think he sounds ridiculous.
So also in that, and another statement that he made in that conversation that sounds ridiculous in some ways, was that the U.S. has a lot to learn from communist China when it comes to financial regulation, which again, I think he's, Charlie Munger is quite old. He's well into his 90s, and he's very coherent. And I think he did the good version of talking like an old person here, which is just kind of saying whatever you feel like and not worrying about how to massage it. Because what he's saying here is not quite as extreme as it sounds. His focus was mostly on shadow banking and unregulated financial stuff going on at a large scale when it came to China. He wasn't so concerned with Robinhood as a regulatory thing. He was talking a little bit about Jack Ma and sort of saying nice things about the fact that, when he challenged the regulatory authorities there, China reined him in, and frankly, going to some extent to point out that we have a lot of systemic risk in the shadow banking sector in the United States that he would like to see taken care of. So that was kind of the big picture of his comments. There's a lot else going on there, but that was kind of the other old man shouting at the wind moment in that interview. How do people feel about that?
Oh my God.
I know it's hard,
disgusting.
but we'll just keep the ageism out of it. Just keep the ages. This is an ageism-free show, bro. Old people, young people, all
my
welcome.
grandma is 86. She's smart.
It's okay.
She'd never say
It's okay.
trash like this that is saying that we want a system in China that silences people. It's ridiculous. Sorry, go ahead, Zack.
I was going to say.
You can be old and smart.
It's okay. Yeah, hypocrisy transcends.
And I think Charlie Munger is old
all age borders. So it's okay. So yeah, we can make this not about old men yelling at stuff, but it does seem rather silly, especially this headline. David, I'm glad that you gave him the benefit of the doubt and went into this in a bit more nuance and in a bit more detail. But yeah, quite striking to see a headline such as this from one of the figureheads of Wall Street finance. Quite striking indeed. So that's all I got. Naomi, I know. I want to see you going. Do it.
Because I got so much.
Come on.
I'm gonna prep you. I'm gonna prep Naomi so she can knock it out of the park here. Okay. It's interesting that his comments were that they reined in Jack Ma when Jack Ma disappeared for weeks and nobody knew where he went. So is that the kind of financial tyranny we want in the States, where we're just we're disappearing the Bill Gateses of the world just because they step over the line a little bit? That seems like a little bit frightening. But Naomi, just take it away. We got this.
He's praising the Chinese government for silencing people. It's ridiculous. It's absolutely ridiculous. So he says, China essentially just called Ma in and told him, you aren't going to do it, Sonny. And he phrases it as this really good-hearted, we just keeping checks on things. It's like, no, this is tyranny. This is an oppressive totalitarian regime that literally tortures Uyghurs and disappears people that they don't like. And he has the gall to say, oh, yes, this, I'd like to see more of that in my industry. I don't want some of the other stuff they've got going, but in finance, for sure. It's it's ridiculous. So are you saying you want your competitors to be disappeared? Anyone who moves into investing or banking, you would like them to be silenced because, you're playing by the rules, but anyone who steps over it, you'd like that hard hand. It's so ridiculous. This piece just got me so riled up. He phrases it, they said, to hell with you. And he noted that he thought Ma was looking to wade into banking and just do whatever he pleased. Heaven forbid, people should be able to start businesses in industries that they want to start businesses in without the government coming in and disappearing them or threatening their livelihoods or breaking up something that they spent their entire career building up. I think it's disgusting. I think this isn't some like, sweet old man is saying thing we should just dismiss. We should be calling this out for the trash that it is.
Clip it, print it, straight to YouTube.
Yeah.
Nice.
Wait, one more thing before we move on. All right. So he also told CNBC, he said,
hold me back.
our wonderful free enterprise economy is letting all these crazy people go to this gross excess. And the Chinese step in to preemptively stop speculation. It's, again, it is setting himself up so that he's in this privileged position where he's allowed to go and speculate on things, which is essentially what investing is. You're speculating, you're taking a gamble, you're taking a risk, saying something may go up and I'm going to bet money on it. But he doesn't want all of these people to participate in this. So it's like, he really likes his position and he just doesn't want it to be available to the masses. And that is just so hypocritical. It drives me crazy.
Well, on that note, let's move on here, Naomi. Okay, so we have Elon Musk back on Twitter driving the price of a new coin called Baby Doge up. So Tesla CEO tweeted, "Baby Doge, and saw the value increase by more than 80%. So Baby Doge's website says, Baby Doge seeks to impress his father by showing his new improved transaction speeds and adorableness. He is hyper deflationary with an integrated smart staking system built in to reward you. So more Baby Doge coins are being automatically added to your wallet with each transaction." Will, okay, Zack, you want to take it?
Good to Zack.
It's definitely
disappointing.
It's definitely about the technology. Definitely about the technology here. I'm just glad that we're highlighting.
How is it deflationary if it adds
definitely
coins to your
about
wallet?
the technology? Yeah, this is good stuff. This is good stuff. I didn't even know that Baby Doge was a thing. Apparently, I'm not as logged on as Elon Musk is.
It's about a month
I don't
old.
know. I don't know what to
There's
make
a lot
of
of
this thing.
doggy coins.
I don't know what to
A
make
lot
of this
of
thing. I didn't know that this was a thing. I didn't know this was happening. I am so out of touch right now. I don't know what to say. I have no comment other than it's definitely about the technology. Definitely about the technology.
Didn't Doge maintainers just talk about like upgrading the network this week too? And then Elon was a part of that. He was like approving it on Reddit. So I mean, it seems that he's kind of split all over the board on what he wants.
It does feel like that. I would love to have a conversation with Elon and just find out why. Like, is he just trolling them? Like, was this just a nice way to troll with a fun ode to Baby Shark? I don't know.
Well, I mean, he does like to troll the
That's what I
maxis,
thought.
right?
I thought it was
He
just
really
another Doge
pushes.
tweet.
Oh, yeah? Yeah, I mean, it does seem like that on the outset, but I mean, he's pushed back so much on maximalists about just saying like, this isn't the only technology. Like, he's really kind of a little bit angry at that community. So it could just be fun on his behalf to just be like, yeah, just going to tweet about anything. Your angry trolling and the mob mentality isn't going to affect me, and I'm going to keep doing what I want. It's kind of interesting and entertaining to watch this play out.
I know I
just
always
find
go
it so
here with
absurd, Oh, sorry, Jen, go ahead.
No, I want to hear about the absurdity. Tell us.
I'm sorry. Steve is getting a little bit too involved here.
This is how absurd it is. It's
Baby
so absurd that
Steve.
Steve
is
had to
next.
make an appearance. He
Love
was like,
Steve.
baby dogs.
No, I mean, my belief is just Elon doesn't care, and he's just doing this for fun and kicks. And anybody who takes this as some sort of like investment advice, to echo Naomi, like they're taking their lives into their own hands, and that's on them. That being said, this just seems like completely ridiculous, irresponsible, unethical behavior, frankly, from Elon. I mean, if you're just well aware of your influence in something like this and you're just firing off random tweets that people will take as investment advice, it really starts to make me think that, like, if the SEC, for example, were to eventually figure out somehow that he had like bought Baby Doge before tweeting about it, there could be something there to be concerned about from a like a pump and dump market manipulation perspective. And I think that could also apply, even if that's not his intent, even if he's just truly messing around. I mean, this is a guy who's gotten in trouble with the SEC on Twitter before. So, I mean, it's just going to completely ridiculous levels. The one saving grace I will say is that I don't know what happened to Baby Doge, but Dogecoin is becoming much less susceptible to his pump attempts. I think people have lost patience on that front. So again, we see education happening in real time.
All right. Well, I just filled up the baby Steve bags. So if you're watching this, Elon, tweet about baby Steve because your boy's about to get rich. Let's make it happen. That's going to be the show for Friday. We're going to wrap it there on the baby Doge note. It was fun. That was good. That was a good Friday show. Show number 102, I'm told.
It's the shirt.
Good stuff. It's the shirt. We got the shirt. We got the feet. We got the vibes. It was good. We covered all the bases. So thanks so much. This has been The Hash. We'll be back next week. We have Monday off. We're celebrating a holiday. We'll be back on Tuesday to talk about more in crypto news. I'm Zach. We have Will. We have Jen. We have Naomi. We have David. We're The Hash. We'll be back next week. And you have a great long weekend. See ya.
Bye. See ya.
See ya.
Thanks, everybody.